What's going on, traders? Welcome back to the Peace Profits channel. Another beautiful day here in Miami. Let me see if this is gonna... Yeah, can that focus in? There we go. Look at that. Beautiful day. Absolutely beautiful day here in Miami. Unfortunately, it is another break-even day. This whole week has pretty much been a break-even week, which kind of sucks because pretty much everyone that I've seen on social media is in the green this week. And it seems like I'm the only one that's that's break-even. But it is what it is. I'm sticking to the system. I'm following my rules. Today was actually a pretty good day, price action-wise. I ended up missing an A+ setup on the 5-minute time frame. I don't normally trade on the 5-minute, so I wasn't really looking there for an entry. Did call it out in real time and said that, this one's probably going to run at least a few R. We had a pretty clear draw on liquidity for the day. But yeah, let's jump into the market and what I was looking at, what we did not get, and hopefully you guys can learn a thing or two. So, okay, so market opened and we immediately saw it move to the downside, okay? So it was 9:30 open. 9:30 opened up right here. Off open, I was looking for a move from this 15-minute bearish gap to continue the trend lower to take out these lows here, London lows, and then also tag into this unmitigated or unfilled 1 hour and 4 hour bullish fair value gap. So this was a move I was looking for off market open. Obviously, we just dumped, manipulated lower, took out those lows, and then we saw that nice impulse move to the upside where I was looking for longs, okay? I was looking for longs here on a 1 to 3 minute time frame. Obviously, I never got my entry trigger. And if we go to a higher time frame here, you can see that we had a very clear draw on liquidity higher. Okay, we had this external high, and then also we had this untapped daily bearish fair value gap. So this entire week, I was looking for price to trade into this fair value gap and then look for shorts off of it. So this was a strong draw on liquidity for me to target. So I was looking for longs anywhere from here up to tag that unfilled fair value gap. Now, what I didn't do was I didn't see until we were like right here. So, I mean, not too late of an entry. This is where I said, this is a valid trade. I didn't realize that we saw an inverse here. Okay, I didn't see that we had that inverse on the 5-minute with this candle closure below. Indicator, of course, alerted this as an A+ setup. And this was just a textbook setup, right? Left behind a bullish order block as well. Whenever you see an inverse that leaves behind on the previous candle, like a nice bearish engulfing, so like a bearish engulfing followed by a bullish engulfing, this creates a strong order block or a strong layer of protection. So in most cases, this is going to be a more confident inverse, right? Even though we took a bunch of candles to inverse this 5-minute, because of this order block, I would rate this like an A+ setup, okay? On top of that, we had some trendline liquidity here, and then ES also had a ton of trendline liquidity. So looking back, I'd rate this probably like an A, indicator alerted as an A+ setup because we did have higher time frame delivery. So to me, this was the only like clear good setup of the day. And unfortunately, I just ended up missing this. Again, I'm not normally looking at the 5-minute time frame for an entry, but on a trade like this, like I would put my stop loss like right below this order block. Like I wouldn't want to see price even really retrace back into this inverse here. Like whenever you see an inverse like this delivering from a higher time frame, with that order block confluence, with that bullish engulfing, obviously displacing to the upside, you really want to see that push through. And that's exactly what we got. So in future setups, don't look to have a massive stop loss on a move like this, right? Keep your stop loss pretty tight. And this one ran around, 2.5 R. So yeah, beautiful trade, trend on liquidity, clear draws on liquidity above. Now, the only reason I was hesitant to taking this trade a little bit later was because we did have lower time frame trendline liquidity. And I know some IFVG traders probably took this inverse here, this bullish like 1-minute inverse, which I was watching for. But this is not a trade I would ever take, okay? Because we do have equal lows below. We have low resistance liquidity here. Like this just was not a high confident 1-minute trade. Like we took out internal highs. Yes, we're delivering from a higher time frame gap, but we're also still rejecting at the time from a 15-minute bearish gap. So whenever we're wedged between two draws in liquidity, there's really no high confidence setup, which is why I said there was really no good trade following my system on the 1 to 3 minute time frame, looking for inversions. Like this is not an inversion I would take. So the 5-minute was the only like decent trade, I guess you could say, that we got today. Okay, this 5-minute, which I ended up missing. And then obviously price ran displaced above this daily bearish gap. as soon as we tagged into this daily bearish gap, you know, I really wasn't looking for longs because my main draw on liquidity was reach for the day. So when I have like a clear draw on liquidity before I enter the market and price reaches that level, I'm pretty much done trading for the day. If I didn't catch that trade, it's going to be a no trade. So at this point, I was looking for short positions, potentially rejecting off of this daily gap, which we eventually did. And I told you guys we would end up reversing this whole move. It's FOMC. We just didn't get a good entry trigger, okay? We did, however, and our new indicator called this as well, get a continuation long trade here, okay? And this is the one I said, you know, you can take this if you want. We had low resistance liquidity above right here, but the risk to reward on this long position was just not worth it, right? And I said this is a valid trade, but because we're still inside the daily bearish gap, we're pretty much trading at less than a 1-to-1 risk to reward. So ended up fading this long position. Again, still looking for shorts at this level. Obviously, we had a ton of equal highs here. We had like 2 equal highs here. So this was a pretty good inverse like continuation trade using the continuation model. But risk to reward was just not it for me. We were too high in premium inside of a daily bearish gap. And then, you know, we just kind of chopped around for the rest of the AM session. And it was, you know, I'm getting off after that. No trade for me. Eventually ended up reversing the entire move. You know, we did get this V-shape inverse at the top. Indicator called this as well. This one would have been a break-even trade. And even this short position, I probably wouldn't have taken. Did we get a bearish SMT here? Okay, so we did get a bearish SMT. So this was actually the move I was looking for, which occurred right at like 1 p.m. So I'm not trading at 1 p.m. But there was your bearish SMT. So that was your next best trade. That like really only 2 good trades. You had the 5-minute long, and then this would have been another good trade here with the bearish SMT inverse right here on NQ. Probably put my stop loss above that bearish gap, and you know, target all these lows down here, which is my main draw. Like when I was looking for shorts, I was looking to target all these lows down here, which we eventually got. But I'm not trading at 1 p.m. So PM session has been a lot better than AM session recently. For my strategy, which is kind of unfortunate because I really don't like to trade PM session. I'm usually off doing other things, but we've been getting some great moves. So I might have to start trading PM session in the coming weeks here, just based on how price action is moving. But yeah, that is it for today. Again, 5-minute move, really clean move. Just ended up missing this one, and then we got that bearish SMT right here with ES, and this was the move I was looking for, targeting all of these lows down here. So, you know, again, pretty much every single trading day over the past week and a half, I've been at break even over the past week and a half. Every single move in the market, or almost every single move, I have anticipated. Like I was waiting for us to consolidate. I was waiting for us to put in manipulation, you know, bearish SMT, and then look for shorts. I wasn't trading at 1 p.m. And then this move here, I just didn't see it. I just didn't see the move in time. So a little bit frustrating, but it is what it is. You know, we're following our system. Obviously, we are getting some good trades. Just execution has been rough recently. Execution has just not been there for me. But yeah, break even day in the markets. That's going to be the recap for today. Nothing crazy. Price action is moving a lot better than it was in January, though. Like there's so much opportunity in these markets. It's just you really have to be on. You really have to be on and like pay attention like very closely because there's sneaky little setups, right? Like I wasn't looking at the 5-minute. We had a beautiful A+ setup on the 5-minute, and the stop loss was not that big for being on the 5-minute. You know, 50-point stop loss, nothing crazy. So, you know, you could even trade this with a few micros, 2-3 micros, and you're seeing some pretty good gains. So, yeah, kind of unfortunate, but that is it for today's trade recap. Let me know if you guys have any questions. If you guys want to get funded up to $750K, you can use the link down in the description below using code EASY to sign up to Lucid Trading, which is my recommended prop firm. And of course, you guys can join the group and live trade with me every single morning. But yeah, that is going to be it for this video. I'll see you guys next time.